Good morning, everyone, and welcome to our CSRD webinar. My name is Colette Shirley, and I'm the Director of Sustainability here at Bank of Ireland. We really hope you enjoy this morning's session. It's really aimed at unpacking CSRD and to provide some practical next steps for our businesses as they fall into scope. CSRD, as you know, comes from EU legislation, and it really aims to put sustainability reporting on an equal footing with financial reporting. We here at Bank of Ireland are in scope ourselves and due to report in 2025. So we understand the significant effort and resource that's required to prepare and to complete the CSRD task. And we really wanted to support our customers and provide some practical tools as they go through CSRD, and also to share the extensive knowledge of Davy Horizons, which is our in-house sustainability consultancy service. So with that, I hope you enjoyed this morning's session. There'll be an opportunity for some Q&A at the end, and I'm going to hand over to Dr. Dorothy Maxwell at Davy Horizons.
Thanks so much, Colette. Good morning, everybody. Really nice to have you here today. Let me walk you through the agenda that we plan. As Colette said, I am the head of Davy Horizons, and we're the internal sustainability consultancy within Bank of Ireland Group. What our ambition today is to give you a practical introduction to the Corporate Sustainability Reporting Directive, CSRD. So what we'll do is we'll first of all start off with what it is, when businesses are coming in scope, and how you can align going forward. And we're going to share some case examples to really start to illustrate some of the detail, and then we'll do some deep dives within certain sectors to give you a little bit further detail. There's also many resources that you can draw on to support you as you start to prepare yourself to align with CSRD law, both financially, but also from a knowledge perspective. So we'll share those as well. And in terms of timing, what we're proposing is we're going to share this information with you for about 35 to 40 minutes and then open up for Q&A. So if you have questions as we're going through, just pop them in the chat box, and when we come to that section, we'll take them. Thank you to those who sent us some questions in advance, and we're going to take those as well. I think you should have received a pack already for this webinar today. Anything we share with you is in that pack. Okay, so just before we kick off, I'm going to just give you a brief introduction to myself and Davy Horizons colleagues here on the webinar, just in case you don't know us. So if we just pop on to the next slide, please. So Davy Horizons is a team of 8 sustainability practitioners. We focus on all aspects of environmental, social, and governance issues that are relevant to businesses and government. And in total, we have about 45 years of experience working in these areas. And we're very focused also on thought leadership. So if you pop on to the next slide, if you are not already signed up to things like our newsletter or come to our quarterly events, we are most welcome, but they're for Bank of Ireland and wider businesses to come along, customers to come along. So go on to the website. All of our insight publications, access to any of this information is for free. Just feel free to help yourselves. If we pop on to the next slide, in light of all of the thought leadership that we do, we've actually been working over the last 2 years with the first companies that are in scope for CSRD. So these are large companies. And we were delighted to work with IBEC to produce the guide for Ireland Inc. on how to prepare for CSRD. And this has been launched in the last month. There's a guide and there's also a podcast. So you can download this at the link. Again, it's for free. A lot of what we talk about today comes from that, but it is a really useful guide to understand what this is all about, but also as you go forward to share it with your internal stakeholders and to help them to understand what CSRD is about. And there's some really nice case examples in there as well, both from large businesses, international businesses in Ireland, but also small businesses. Bank of Ireland is there, but you can see at the bottom also many other companies that you might recognize. And those case examples are really helpful. Okay, to kick us off on the topic, I'm going to pass over now to my colleague, Dr. Helen Kavanagh, and she's going to give us an introduction to CSRD. Thanks so much, Helen.
No worries. Thanks, Dorothy. Hi, I'm Helen, as Dorothy said, and if you just move back one slide, that would be great. Thank you. We're going to run through the whats and the whys of what CSRD is here. And I guess the main thing to think about is, the world is changing, I guess. Customers, investors, and regulators are all asking, what are you doing to protect the planet and to contribute to society? And the CSRD is probably Europe's answer to this question. It ensures that sustainability reporting is clear, credible, and probably most importantly, comparable, because I'm sure most people on this call at the moment are already doing bits and pieces in this area already. So maybe the way to think about it is to think of it like financial reporting, but for the environment, but for governance and social impact. It helps businesses really demonstrate their value beyond profits. It's not just compliance, it really is a positive step. So, what is the CSRD? Simply put, it's probably a set of EU rules that modernize and regulate sustainability reporting. Its key features, which we have listed here on the slide, are you now have to provide integrated reporting, such as a sustainability statement in your annual report, which we'll look at a little bit later on in this webinar. We need detailed ESG disclosures. These require companies to report on mandatory issues that are legally required and material issues, which looks at how the company impacts the environment and society and vice versa. And that's done by using something called a double materiality assessment, which again, Dorothy will walk us through later on in this seminar. What else is it? It is standardized, as I said, and it is reliable ESG data. And what the biggest probably uplift on this is it's subject to limited assurance. And this is to ensure that it avoids greenwash. How will that look in reality in our sustainability statements? Like financial reporting, it will require digital tagging using XBRL. That will make ESG data really accessible and easy to analyze. Why does that matter? Why is that important? Well, CSRD matters because it really does go, as I said, beyond that compliance piece. For investors, that clear ESG data will make assessing risks and opportunities for them much clearer to analyze and much easier to make comparable decisions. For businesses like you on the call, it helps build trust with stakeholders and avoids accusations of greenwashing. For society as a whole, it probably holds companies accountable for addressing global challenges like climate change and inequality. So again, it's bringing that issue of transparency across. But just to look a little bit on what we've written on the slide, just to show you that broader impact, it really does drive market transformation as well. It aligns businesses with the EU taxonomy. And this tracks sustainability activities through your revenue, through CapEx and OpEx. It also supports compliance with the SFDR. And that's all really, really key and important. So, how does that CSRD work in reality? Well, the infographic on the right-hand side of the page probably shows you how this works at quite a high level. I guess to break it down simply for you, maybe think of the CSRD as a bridge connecting companies, financial markets, and society together. Again, it just ensures that there's access to consistent and reliable sustainability data. So that's sort of what that infographic is showing you here. If you want to go into a little bit more detail, again, that IBEC report will look at it for you. But be under no illusions, the CSRD, as I'm sure you probably aren't, is really ambitious. It does cover 12 standards. It's over 350 pages of requirements and has probably well over 1,000 data points. While that probably sounds quite daunting, you won't be, required to disclose on all those data points, which again we'll unpack a little bit later. But also, it is a changing environment, and the EU is, even as we speak now, looking to make that a little bit easier by possibly combining the CSRD with taxonomy and CS-D to simplify that process in 2025. So it is moving still, and it will continue to evolve like financial reporting over 100 years. This is very much in its infancy. So probably before we move on to the next slide, it's probably worth just bearing in mind the key notes from this would be CSRD isn't just about compliance. It's about telling your story, how you're contributing and giving back. That transparency builds trust, it fosters innovation and investment. And that's really, really key and important. You don't have to tackle it all at once, and Dorothy will walk you through that double materiality process. That's really important. And as I said, this is just a starting point. Think of it in terms of long-term commitment. That's really, really important. And it's a really strong, solid foundation with which to start looking at these issues. If we can move on to the next slide, please. So when do you start reporting? Who falls in scope and when? And as Dorothy said at the beginning, we've been working for the last number of years with large organizations with over 500 employees. And they are at the moment reporting on financial year 2024's data to report next year. So they're well underway with auditors in place. For many of you on this call, you probably will fall into scope in the fiscal year 2025 data to report in 2026. And then for those who fall under SMEs, you probably will fall under scope in data for 2026 to report in 2027. However, listed SMEs can delay that reporting until 2028. And there's probably more information to unpack that a little bit more in the IBEC guide. So that sort of gives you a sense of when you're going to be reporting. Again, it's important that you look into this in a little bit more detail as all cases are individual. But probably the key takeaway from this slide is to go, if you haven't already, it's probably time to begin preparing now. The earlier you prepare, the better and the smoother this process is going to be. Always plan for assurance. That point of reports will require limited assurance now. It's good to understand what that means for you. And possibly while there are opt-outs, still try and think about preparing as it goes now. So they're probably the key takeaways from this point. And let's just see what it is that you're reporting on in those years in the next slide, if that's okay, please. Thanks. So this is when we look into the European Sustainability Reporting Standards, and this is the framework that you'll be reporting on under CSRD. Sustainability matters, which is that green box there. These matters ensure companies address the most critical sustainability issues. They reflect their impact on the environment and on society and on governance practice. These are the foundations with which the CSRD was grounded. Now, how do you do that in practical terms? And that's the infographic on the right-hand side of that screen. These are the European Sustainable Reporting Standards. There are 12 of them. It is a comprehensive playbook, which includes, as I said, those 12 standards. It is supported by implementation guidance, and EFRAG, who produces this, have got great guidance on it. And it does provide clarity on what businesses need to disclose across the E, the S, and the G. So the first two cross-cutting standards that you'll see there are ESRS 1 and ESRS 2. These apply across all the ESG pillars. They are mandatory to report on. And this provides a consistent baseline for companies, and it lays the foundations for addressing those key sustainability matters. However, there are, as you see, from the E1 to E5, the S1 to S4, and the G1, also key material issues that we also have to look at. They can range from climate change, from mitigation and adaptation strategies, to circular economy in E5, to workers in the value chain, which revolves around human rights and fair treatment, to in your own workforce understanding gender pay gaps. Again, there are 1,000 data points here, so it is quite dense and there is quite a lot. But you as an organization may not have to report on all of them. And that's, as I said, what Dorothy will talk about at a little later stage. The key issue here is, now that you've understood those topics, as I said, from E1 to E5 to S1 to S4, is how do companies know what is important to focus on? What is material for you to report on beyond those mandatory requirements? And that's where double materiality comes into play, as I said. And that's what Dorothy will walk you through. And that's probably the key and at the heart of CSRD reporting. But if you move on to the next page, before we get to that, I think it's probably super, super important that as organizations you bear in mind that this isn't being done in silo. This isn't a sustainability person or one individual looking to do this reporting. It touches across every business unit, from finance and reporting, which you probably would be aware of, to governance, as I said, HR coming in under the S1 band, risk and audit across all of it, procurement for supply chains issues, investments and M&As. It's all there, and it also connects to all those broader sustainability standards, which you see over here on the right-hand side, from things that you'd probably be very familiar with, like CDP and science-based targets, to ISO 14001 for environmental management systems, to IFRS. They're all there. These connections are there to ensure that CSRD isn't in a vacuum. They're there to align with best practice at all points, to enable stakeholder expectations to be quite clear and, again, transparent. So this is where it all comes together. And I'm going to hand it over now to Dorothy, just to allow her to walk through that point of how you work out what is material to you as an organization. So thanks, Dorothy. I'll hand it across to you now.
Thanks so much, Helen. I think one of the challenges with the double materiality assessment is the name is very off-putting, and there are a lot of terms in CSRD, and if you're new to sustainability reporting, there's a lot to get used to. But if we park that for a moment, let's just explore what it is, and as Helen is saying, how do you determine what is the most material, thinking of those 12 standards. If you have a look at that illustration in the middle of this slide, there's two things to think about in terms of the aims of double materiality. The first is take your company and look at how you impact both people, that's the S bit, and the G bit, and how you impact planet, that's the E bit. And most of you will already know that. Many of you may well be reporting for a number of years on these issues. You may have also done materiality assessments more formally to identify how you impact people and planet. But that is the first thing. So you want to identify that. But the second bit, and the bit that is new for most companies, is the bit at the top of this illustration. So the CSRD asks you to think about, if you have these impacts on people and planet, how does that affect your financial performance? For both positive, could open up new markets, for example, or negative, it could create risk. It could lose you customers if you don't move quick enough. It could lose you markets. So it asks you to think about both of those things. And that is double materiality. And if we go back to Helen's point at the very beginning of this, CSRD is putting sustainability on an equal footing, ESG on an equal footing as financial data in a company. And this double materiality assessment gives you the foundations to basically gather that information. So that's the ambition. And in terms of the process to actually do the double materiality, CSRD is quite prescriptive. The first of those 12 standards, ESRS 1, goes through the playbook for doing this. And there's also a guidance document, an implementation guidance document that goes into the detail of doing double materiality. And when you come to your first sustainability report, your auditors will be looking for this information. So it's very important that you do the double materiality aligned with the process that's required. And this is an area where companies can get a little bit lost. So it is an area where getting some expertise can really fast track you. But what the process is effectively a risk assessment. You are looking at what your impacts are across environment and social, across financial, what dependencies you have that could affect those impacts. So to give you an example, a classic one that we all have as businesses is we are dependent on energy supply. We pay for it at the moment. Some of you may be procuring renewable electricity tariffs, for example, when you buy your electricity. Some of you, if you do transport, you may be switching to low emission fuels like HVO, hydrogenated vegetable oil, or other options. But we're all dependent on those solutions for a low carbon future, for example, being available at the right price and in the right amounts and easily available, and that they're things that work with our current technologies. So that's a dependency a lot of companies have. And the risk of that might be higher or lower for different companies. So looking at what risks you have, but also what you're dependent on is incredibly important in this exercise. And then all of this helps you to understand in reality, what risks are ahead of me? And also what opportunities, where might I be missing a trick with my business? And the time horizons you look at are from the short term, that financial year, the next 5 years out, and beyond. So CSRD is quite prescriptive on how you do this. The other thing that you need to look at, this isn't just about your own operations, you also need to look upstream and downstream in your value chain. And that's an area where companies sometimes find a little bit of challenge as well. This illustration on the far right of the diagram just outlines the process and basically how you do what I've just described. The very first thing you want to do is map the materiality landscape. Well, what does that mean? That means determining what does good look like. So typically a desktop review would be done for this. What does best practice, the best science standards say? For those of you who are familiar with materiality standards, standards like Global Reporting Initiative, IFRS SASB, that's the Sustainability Accounting Standards Board. There's multiple, and we've outlined them all in the IBEC guide that define for every sector of the economy what are the material issues. So you look across all these things. You also look at your peers. Where are they at in terms of this, which could be a really useful exercise. But the next thing you need to do is talk to stakeholders. And the most important to stakeholders to talk to are the subject matter experts in your own business. So the heads of risk, the heads of audit, the CFO, the operations lead, sustainability if you have them, the HR lead. So you bring all these parties together, and typically you do quite a number of workshop sessions just to tease out all these issues. But that cohort is crucial. But there are other stakeholders, your suppliers, particularly your big tier one suppliers. They can really help you on your solutions into the future, but they can also cause you greater risk if they don't support you going forward. Your customers, particularly if you're business to business, they can be very important to speak with. And your lenders, banks, shareholders, if you're a PLC, in terms of their expectations and what's coming down the line over the next 5 to 10 years. The other crucial one to talk to is your auditor, really to understand their expectations early on, because auditors are new to this. And the more you meet, have early conversations, the easier it will be with that first sustainability report. So you do all that exercise, and then the final thing you do is you bring that information together, normally in a table that lists all your impacts, risks, and opportunities, but also a matrix. And I'll show you 2 examples now because it's much easier to show them. But just to finish off in terms of double materiality and the sort of so what factor of it. So once you've identified what these impacts, risks, and opportunities are, you can then really see where should I be disclosing information every year to show that I actually have my arms around those as a business and I'm truly managing them. And those are the disclosure requirements and your choice in terms of those 12 standards where you say, yes, these are material for reporting. So therefore, I should put in place in my business, if I don't already have it, the right governance, the right strategy, a really clear policy. I should be disclosing how I'm actually managing these impacts, these risks, these opportunities, and then the metrics and targets that I'm using to actually track and trace that and set my own business targets. So that's kind of how everything comes full circle. So if we pop on to the next slide, please. This is an example of a materiality matrix. So this is one from a PLC, an Irish PLC called Origin Enterprises. Origin Enterprises are in the agribusiness sector. And what you see is from their 2024 issued sustainability report on financial year 2023. I've just taken a snip on the left-hand side of their materiality matrix, but on the right-hand side, I think they really position it very well. They have 5 topics that are most material across ES&G, and you can see them there, from biodiversity to climate change to sustainable food systems. These are, of course, the things that would be very material for a company that is in their sector. And if you have a look at the left-hand side at the matrix, so these matrices, basically what you're always interested in is what's in the top quadrant. The top quadrant shows you the things that are most important. And again, you can see these top 5 issues coming up very, very high. So they're the priorities. And if we pop on to the next slide, there's just one more example to show you. So this is from another PLC, Grafton Group. This is from their 2023 sustainability report. If you're not familiar, Grafton Group are Chadwick's and Woody's DIY products, distribution and retail for that product sector. And this is a very nice and clear materiality matrix. So across the bottom, you can see the financial impacts going from moderate to high, and there is a scaling system for this as well. We detail it in the guidance. And on the y-axis, you can see the impacts going from moderate to high. And again, like in the other example, this top right-hand quadrant is really showing the things that are most important. And you can see for them, it was everything from climate change to equality, diversity, and inclusion. Product safety came up very high for them. Also health, safety, and well-being. And interestingly, things like cybersecurity, slightly a little bit lower on the impact scale, but very high in the financial scale. We see that coming up a lot for businesses. Okay, so I hope that gives you a sense of the materiality. And just to finish off from my side, if we could pop on to the next slide, I just wanted to share with you where all this is leading. So when you have your first CSRD aligned report in that first reporting year, what you see here on the right-hand side basically is what that looks like. And CSRD, again, is very prescriptive about this. What it is it's an integrated report. So you're putting this information into the main report. If you already do one, you integrate it within that. And the sections are defined. There's a general one, there's one on environmental, social, and governance. And basically, all of those topics that you identified in your DUB materiality assessment that you felt were really important for reporting, so typically those ones in the top quadrant of those matrices, those are the ones where you are disclosing the information every year. And again, it's across these topics and the bullets at the bottom of this slide, from the governance and strategy and policy, all the way through to the metrics and targets of how you're showing year on year how you're actually managing these things. And then in terms of disclosures and data points, depending upon which of the 12 standards we're talking about, they're quite prescriptive. So we're going to give you a bit of an example just to give you a sense of what that's like, but they're very much defined by each of those standards. So I'll pass back to Helen, and she's going to give you the first of those examples. Thanks, Helen.
Thanks, Dorothy. Can you move on to the next? Oh, you're really good. So as we said, there were the 12 points, the 12 topics, disclosure topics, and we're going to deep dive into one of them now just to see how it actually plays out in reality. The first one that we're going to look at is the S2, which is workers in the value chain. Why are we looking at that, and who are they? ESRS 2 focuses, as I said, on the workers in the value chain. That means in reality subcontractors, suppliers, outsourced operations consultants. Why do they want you to look at this? The aim is to ensure probably fair treatment and mitigate risks and promote accountability across all your supply chain, not just within your direct business. Why does that matter? Well, value chain workers are often considered at higher risk for labour rights violations, unsafe working conditions, and inequities. And as organisations, we need to be held accountable and to make sure that who we're doing business with is not abusing labour rights or the workers aren't in unsafe working areas. So having an ES or SS2, it does ensure transparency and accountability. And again, it helps build trust with the stakeholders. It helps to mitigate reputational and operational risks. That's why it's there. It's helped us to report and to track how we're managing our own supply chains. Supply chain in general is quite tough to focus on. But under this area, there are some key subtopics which you've outlined here that you need to look at. The material risks and opportunities for value chain workers, as I said, that covers things like unfair wages, child labour, and unsafe working conditions. Human rights and labour standards are also looked at. It ensures, and again, as I said, these all interconnect, that there's compliance with ILO standards, conventions, and their principles. It's really important. There's worker engagement, that you're facilitating collaboration and communication with value chain workers. You're not just putting out a policy in a vacuum. You're checking that this aligns with what those workers in your value chain need and want, and they're giving you feedback to constantly maintain and check that. They also have a mechanism for grievance, like whistleblowers that you often would have internally in companies, that usually gets expanded out to the supply chain. But how are you doing that? Are you putting notices up around manufacturing facilities, if that's where you are? Are they in the correct languages? If they may be with workers who are non-literate, do you have signs and supports there in place to ensure that there's actual proper access to those grievance mechanisms? Is it confidential? They will have no repercussions. All of that needs to be put in place there. If something has been identified throughout your value chain that you need to correct, if there is some issue has occurred within labour rights or child labour has been noted, you need to have clear action plans in place and remedies in place to mitigate for that risk. That's super important. And they also are asking you to track progress and accountability. So again, as Dorothy said, those metrics need to be in place for you to track against. And there must be a senior level oversight within this. Somebody in your business must be held accountable. So what are those required disclosures and what do they look like in reality? For workers in the value chain, usually you would have a human rights policy, but in particular for supply chain, you would probably have a supplier code of conduct. You would be identifying value chain workers that are impacted by risks and opportunities. As I said, there probably would be a very clear engagement process worked out with workers and representatives in the value chain. There are really clear descriptions of grievance mechanisms. What happens if something occurs? How do workers in your value chain let you know about that? And if something has occurred, what actions are taken to mitigate? And to ensure that it doesn't happen again, to ensure that the value chain is being protected. Again, the metrics and the targets, as we said, need to be looked at. In particular, that board oversight and senior management KPIs need to be disclosed. On the right, these just give you sort of a sample of what the actual data points are that you're looking for. So S2-101 is a description of your relevant human rights policy commitments. It's a narrative. So again, some data points will require narratives, some will be numbers, some will be monetary, some will be percentiles. They are very, very prescriptive as to what they're looking for. And again, they will all have to be formatted in XBRL to ensure that, again, these are easily to upload and can be comparable. S3 there, as S2-3, as we said there, is really looking in deep dive into those grievance mechanisms, including the channels, the confidentiality, and the effectiveness of that. So, there's always circular. It's not just sitting in the ether. They are checking that the value chain workers have a right to help inform and improve if the methods that are there aren't quite working up to standard. But if they are going well, they also have the ability to share that in terms of positive impact as well. I'm going to hand it back to Dorothy now, who will give you sort of a sense from the environmental side, as this was the social one, how that looks in reality as well in terms of disclosure points and topics.
Thanks so much, Helen. So just to finish off on the deep dives, I'm going to take you through the European Sustainability Reporting Standard E1, which is on climate change. And in reality, there's very few businesses, certainly that we've worked with to date, that could rationalize their impact in terms of climate change not being a topic material for reporting. So this is one that most companies feel, yes, this is in my top quartile. I definitely do need to disclose on it. So, like Helen said, on the left-hand side, each of these ESRS standards, they have topics and subtopics. Again, unfortunate terminology, but that's the reality of it. And for climate change, there are three. One is, what are you doing to mitigate climate change? So how are you reducing your own impacts? What are you doing in terms of adaptation to climate change? So let's say you're a food company that's very affected by erratic weather. You're a built environment company that's very affected by increased amounts of flooding. And how that has to change things. So that's to take those two aspects into account. And then the third one is energy. What are you doing in terms of the energy consumption in your own business, thinking of a transition to a low and zero carbon future? So you look from those three perspectives, and then the disclosures that are required, I've just put them in plain English as a list here, but they are multiple in this particular standard. So the very first thing you need, and this is very similar across all of the 12 standards, is a really clear policy. It can be in your main sustainability policy. You don't need one for each, but you need to be really clear how are you tackling each of those three subtopics. And then you need to have measured your emissions of greenhouse gases across all of the three scopes. Some of you will be familiar with that, some of you may not. So scope one is everything you can control, the power that you're in, the fuels that you're using. If you own your own transport, the fuels that you're using for that and the emissions for that. They're everything within your control. That's scope one. Scope two is what you procure. That's your electricity. You have the option to go to a renewable green tariff, for example. And then scope three is everything in your value chain. That is the one that most companies find it a little bit more challenging because you have to engage across that value chain to get that information or estimate it. And in the packs that we've shared with you, there are some time delays in the rollout of certain requirements. And one of those relates to scope three. So in your first year of reporting, if climate change is material, you only actually have to report scope one and scope two. So you get a little bit of a pass there for 1 year, and then you have to start reporting scope three. And we've given all those timelines in the pack for time purposes. I won't dwell on it today, but that's just an FYI. The next thing that you're required to do is to set a target that's aligned with a 1.5 degrees Celsius future. So as we know from the Paris Agreement on climate change and climate science, what we're aiming to do is to hold global warming at a maximum 1.5 degrees Celsius. And while we're dangerously close to losing that opportunity, that is still the ambition. So for every company, looking at what you need to do to meet that is basically what CSRD is asking you to do. And then to set targets associated with that. And normally they would be 8 to 10 years out. And then to have a climate transition plan that aligns with that. Now, some of you might be familiar with the Science Based Targets Initiative. Helen mentioned it earlier. This is the global gold standard for setting near-term and long-term reduction targets on greenhouse gas emissions. So if you're not familiar with it, you can pop into the website, you can model your targets, and it shows you what your reduction basically needs to be and how you set that target. But that is best practice. You don't have to have that for CSRD, but if you do have it, it certainly makes things easier. Other stakeholders like it from that perspective as well. The other thing that you need to have is to have looked at your climate risks. And this is typically described as climate scenario modeling to really see physically what are the changes that climate change might have on your business, but also as the low carbon economy transitions over the next 10 years, what are the effects on the business, either in terms of what you do or the financials around it. That can be a fairly sizable exercise for most businesses, and you need to think about that to make sure it's really practical. Again, very useful to work with experts on that. You then also need to look at how are you financing your climate transition plan? How much CapEx, how much OpEx are you putting into it? If your business is basically focusing on sustainability, how much turnover are you generating from this? Maybe you're providing low carbon solutions. The other things are to use an internal carbon price to shape your financial conversations in the business and to build in accountability amongst your senior decision makers and to make that really effective through linking that to remuneration. So there's a lot in that in terms of climate. And if you look on the right-hand side, I've just given you a very small sample of some of the specific disclosures around that. And like Helen described, you can see some of them are narrative and some of them are monetary. And I've mentioned most of them. So let me just pop on to the next slide and I'll just give you an example of how another company is actually doing that right now. So this is the same example I used earlier. It's Origin Enterprises, PLC. This is just a snip from their sustainability report showing how they're meeting some of those disclosure obligations. So on the right-hand side, you can see their greenhouse gas inventory showing their scope 1, 2, and 3, and how it specifically has to be set out. And in the report, CSRD requires that to be verified. So a third party needs to look at it and sign off that it's accurate, and you have that in your report. The other thing that they have is they set out what their reduction targets are. Their science-based targets validated, and then they set out their climate transition plan to meet that. And for them, it's around things like producing fertilizers that have less nitrous oxide in them, because that's quite a potent greenhouse gas, and that's a large part of what they produce. It's also about developing low carbon options for their customers with respect to sustainable land and agriculture and the technologies to actually support those companies, enable them. So they provide a lot of information on their turnover and their investment in terms of that part of the business. So that just gives you a sense of how a company actually can disclose in practice on some of these very specific requirements. Okay, so I hope that's been helpful, and that's really all the knowledge bit of this done. So we're just going to finish off by passing over to Shauna, and she's going to highlight for you where you can get some supports. Thanks so much, Shauna.
Thanks, Dorothy. So I'm conscious there's been a lot of information shared today, a lot to digest, some new information for some of the colleagues on the call, and it can be quite overwhelming. So as Dorothy and Helen have mentioned, CSRD is very much a journey. So we just wanted to flag some of the resources and supports that are available to colleagues on the call as they go on that journey. And there's a wide range available from a number of different sources, both in terms of knowledge and capacity building, and also, you know, grants and financial support. So I'll just flag a few of those just before we head on to the Q&A. Again, Dorothy and Helen have mentioned the IBEC guide, which was a really useful tool published earlier this year and a great tool to use in conjunction with webinars such as this. Additionally, the Department of Enterprise, Trade and Employment, they have a really fantastic responsible business portal, which signposts a number of different resources there. Again, the government also has a climate toolkit for business, which is quite useful for some of the colleagues on the call. And then again, at an EU level, Helen mentioned earlier that EFRAG, the advisory group who developed the European standards, have a range of guidance for implementation. So I would encourage colleagues to have a read of those. But in terms of grants and financial support, there are some really interesting options. Bank of Ireland have a number of sustainable finance products, such as the Sustainability Linked Loan and the Green CapEx Loan. So I would encourage colleagues to get in touch with their relationship manager for further information on those. And additionally, there are several agencies who are supporting, such as Enterprise Ireland, the IDA, your local enterprise office, the SEAI, and the National Transport Authority. The links to many of those are on this slide and they will be with you in your pack. So I'd encourage you to have a little exploration of those sources and see what is available and best suits your needs. So with that, I'll pass back over to Colette to open the Q&A. Thank you.
Thanks, Mel, Shauna, for all that and for the Davy team. That was really, really interesting. And it was good to see, what's behind CSRD, right? Because it's a big word and a hot topic. So it's really good to see how that's broken down. Thanks very much. Firstly, just want to say before I jump into the questions that this webinar is being recorded and will be shared afterwards. There was a couple of inquiries about that. So I think we'll start with the questions that we had before we started the webinar. Maybe over to you, Dorothy, for this one. When are some of the smaller businesses coming into scope, as these are our clients and we want to understand how they're going to be affected?
Yeah, so that's a great question. And like Helen described, the timescales, if you're a listed SME, are from 2027, but you have a 2-year opt-out. So you can say, I'm not going to report till 2029. So that's just important to note on that. Outside of that, you have to meet 2 of the 3 criteria that Helen has described: 250 employees or more, the turnover, and the balance sheet requirements. So if you're not meeting those, then you're not in scope. The only thing I would be cautious of, particularly if you're dealing with small businesses, I think this company mentioned in their value chain, if your customer's in scope and they're a bigger company, they may be coming to you to get information. And we increasingly see a lot of that. And in the guide we've done with IBEC, you'll see the narrative focuses on that a lot, because that's often where companies are really not ready to provide that information. So just be aware of that. Thanks, Colette.
Thanks, Sardi. I think that's actually a really important point, right? That even though you're not legally obliged to report, you're going to get these questions from your key stakeholders as well. So it's useful to be prepared, I suppose. The other one that we had was around, the fact that Northern Ireland is not included in the EU, and therefore CSRD is not obligatory for those. So how should our Northern Irish businesses be thinking about CSRD?
Yeah, this is, again, it's a great question. So CSRD, of course, is EU law, but it does include non-EU companies. So if you have a large presence in Europe, but you're actually HQ'd out of Northern Ireland, then you could come into scope. So it's a case of, again, looking at the requirements. We've detailed them very specifically in the guidance. For example, non-EU companies that generate over 150 million per annum in the EU, and that you have a turnover over 40 million, those are in scope. So you really need to look specifically for your business if you meet that. The one other thing I would say is, if you're out of scope on CSRD and you're based in Northern Ireland, you're probably already subject to the streamlined energy and carbon reporting, where you already have to report your scope 1 and 2 and a bit of scope 3 in your annual accounts anyway. So there's different ways in that you can be caught in this. Thanks, Colette.
That's great. Look, actually, a lot of the questions coming in are around scope, and quite interesting questions as well. So I have one here. If a company's financial year end starts on the 30th of December 2024, rather than the 1st of January 2025, does this mean that you're not requested to report until 2027 on 2026? Like, so how did the dates, how effective are they in terms of a company where the year end sits?
Yes, I mean, in terms of that, Helen and Shauna, I don't know if you have a particular view and want to take that one. I would start with the first question more. When does your financial year end? Is the first question we'd normally ask. Helen, I don't know if you want to jump in on that one.
No, I would agree. It's when does your financial year end, and that's when you are due to report. That's how your financial year. So it is whatever month of that year, as opposed to.
So in this example, I guess their financial year would end on the 29th of December.
So that's when you're due to report for that year. You go in line with your financial reporting cycle.
Assuming you meet the other.
Line it up because it's in your annual report. So the same dates apply. As in when you're in scope, that's to do with the scope outlined for when the year is, but the actual reporting goes into your annual report, which is in your annual report framework for timelines. So if it starts in March and ends in February the following year, that's the annual report year that you would do for sustainability reporting as well, for example.
Okay. Thanks. And another kind of interesting one is for companies that don't currently publicly report on their financial statements. Are they still in scope for sustainability reporting?
I think this is a really interesting one. And, we're only starting to see the first of these now, private companies in that situation. But as we've talked about in this webinar, remember, it's double materiality. There's a whole financial piece to this. So the answer is yes, you will have to report financial information as relates to this. And that, I think, can be a little bit of mindset shift for quite a lot of companies, and we're just starting to see what that looks like. And I think here, I don't know, Helen and Shauna, if you want to jump in, but I think the conversation with the auditor is incredibly important for companies who are new in this space.
Yeah, I couldn't agree more with you, Dorothy. And the earlier you start those conversations, the better. A bit like the preparedness point, start as soon as you possibly can on all of these questions. And the auditor will very much guide and help in that situation.
Okay, I'm going to read this one from screen, if that's okay. So I have a question about including materiality matrix in your sustainability statement. If you report on topics simply because they are material, doesn't showing the level of materiality in a matrix become mute?
Again, really good question. I think the thing to bear in mind is in that first sustainability report that you'll do, but actually every year on year, you've got to show how you got there. So that's what a description of the double materiality assessment that you went through and using a matrix is all about. You describe how you get there and you rationalize it, because remember, if something is material, we didn't talk in a lot of detail about this, but you can say, how material is it to me? And remember, those examples we gave, they're in the top quadrant. So there's something that is really significant to their business in terms of its impact. They're the things that you want to be reporting on, certainly in those early years. So you may say, another topic here, yes, there is some materiality, but actually it's quite low in terms of its impacts in terms of my business from a E&S perspective or a G perspective or a financial perspective. So therefore, I don't feel that I need to be disclosing on it in the level that CSRD requires. You can do that, and then you write that in your annual report that is your position, but you need to have proof of how you got there. So that's the reason for disclosing and actually showing that matrix. So you're actually not doubling up, you're just giving the evidence base for the process. But it's a really good question. I don't know, Shauna, do you want to add anything to that?
No, I think the whole idea of showing your workings and how you got to the material pieces to your business is really important. And it's something that, external stakeholders who are using the statements will be looking for to assess them.
Great. Thanks, guys. The next one's a really good question as well, around really about how people should think about upskilling around CSRD. And should we begin like really studying the regulations, or how's the best way to kind of prepare themselves for the reporting cycle?
Do you want to take that one, Helen?
In terms of upskilling, I guess, as I sort of noted, it goes across your whole business. So probably that first piece is just to upskill across sustainability to ensure everybody is aware of what sustainability is, that CSRD is there, and across those material topics, what part of the business need to know about it. Is there going to be a specific member of your organization that's going to look after that? Really important to understand that from the C-suite, from the top half down, and then to build it out from there. But upskilling is very much at the core of this, but it's not just one sustainability expert. It has to be upskilling across all those business functions.
And I would add for us, as sustainability professionals, we have to immerse ourselves in the law. For this, there's a lot that sits behind it, right? And also there's guidance documents, and we're on the different, we worked linked closely with FRAG and the parties, the source parties, where all this comes from. So we approach it from that level. So we really, can get into the detail. But one of the reasons why we wrote the guide with IBEC was such that businesses mightn't have to do that level of rigor. So even that guidance document, it's a great starting point and signposts you then to the other documents. I think it'll take a good bit of work out of it for companies, particularly if you're coming new to this. So definitely use that and save yourselves a little bit of effort. And of course, just reach out. That's what we're here for, and other parties. All you have to do is reach out if you have questions or you need help. There's plenty of parties out there who do that.
Yeah. Oh, sorry. And likewise, just to add to that point, I think there's a huge amount of knowledge and capacity building being done among peers. So, like Davy Horizons, we have a ESG peer network, and that's a really useful space for very interesting conversations to happen. So looking to your peers is really useful for that capacity building also.
Brilliant. Thanks, Shauna. I think we might finish off on one final one around, I suppose on average, how long does it take for a business to prepare themselves for CSRD from kind of initial risk assessment through to reporting? Not to scare anybody.
Yeah, I mean, Helen, do you want to give your thoughts on that?
Well, it's how long do they usually have to do it? I would suggest, I guess, if they have to report, they will. Ideally, what we're looking at the moment is sort of 2 to 3 years usually to sort of start into that process, is what we're looking at. And that is to give you the best chance to upgrade your systems. As you said, there are a lot of disclosure points to understand what it is you're going to be disclosing on, to ensure your business units are all aware of those disclosure points, and to make sure that there are appropriate systems in place to track that and to disclose. So it does take time. The earlier you start, the better. It's probably the best advice we could give in that sense.
And I would add, in terms of just the preparation of it, give yourself about 3 months to start to engage your internal team leads about what this is, and then to do the double materiality assessment. And if you're a very large business, a big PLC, it might take a little bit longer, maybe up to 6 months, but definitely give yourself 3 months, because remember, you want to reach out to stakeholders, you want to get information. It has to be done a certain way to gather that evidence base for that first report. So that is the sort of time horizon for preparedness you should be looking at.
Brilliant. Great. Listen, thanks a mil to the Davy Horizon team. That was a really, really interesting webinar. A lot of information, I think, and to say detail behind the large title of CSRD. Just to all of our customers out there, if you have any further questions or you'd like to meet the Davy team, then reach out to myself or to your local RM, and we can arrange for those questions or introductions to be arranged. And thanks everyone for coming today. Thank you.
Thank you.
Thank you. Bye.
Bye.